then why not? You've done all the foundation setting. It's okay to go up and try something else, get outside the borders, get uncomfortable, see what is outside there, What's up, guys? I know it's still early 2024 and you're still thinking of those investments that you have been thinking about. You're thinking of your financial goals. What do you want to achieve? What are your plans for 2024? And you want that by the end of the year, you take stock of what has been happening and you know exactly what you've managed to do. So guys, welcome to my channel, Ken's Money Matters. Once again, please subscribe, share. Let's make this year a good year for everyone by sharing knowledge, sharing information, sharing this kind of channels so that people can learn. Let's not just focus so much on fun. Let's focus on building wealth as well. So guys, it's a new year. You're thinking, okay, where should I start putting my money? You're a beginner, or you're someone who has been investing, but you haven't been going aggressively, or you want to diversify, or you're someone who is heavily invested in one area, and you're thinking, hey, why not? I need to start thinking of other sources of income. I need to think of ways I can invest. And remember, most of these investments can give you very nice source of income, passive source of income, right? Which can just be coming. So actually this video should be more like areas you can invest in 2024 that would definitely give you passive income. That should be the title of the video, guys. Anyways, so we want to get into it. We want to talk about some of the best investments. I think I have around 9 that will be so amazing. And if you invest in all of these things, you don't have to invest in all at the beginning, but you know that you have options. So if one is not working as you want, or one isn't going with your financial objectives and goals, then you know where to go to next, right? So I'll make it simple, make it straightforward. And remember, I'm on TikTok as well. TikTok. So make sure you follow me, Ken's Money Matters, on TikTok, Instagram. If you want those short, nice videos that will just give you like good information about money, about wealth building, about books I'm reading, about everything I'm doing in terms of finance and money and wealth and everything like that, TikTok, Ken's Money Matters. Anyways, so 2024, what are you buying? What are you investing in? What are your financial goals? So make sure whatever it is you are investing in goes well with your financial goals. Don't just pick things all over the place and imagine that it will all fit in together at the end of the day. Everything has to fit in properly. And I'm going to talk about portfolio management, or more like portfolio building for beginners. A portfolio is basically just whatever it is you've invested in, or what you can call, some people call it asset allocation. Where do I put money? Where do I put this? Where do I put this? And how does it all come together to give me a good, I would say, financial foundation, and financial foundation that can lead to very good growth, that doesn't expose me too much to risk and also doesn't make me too conservative such that I miss out on opportunities. So there are so many opportunities this year. One of them, this number one, I never like it so much. It's one of the things I always say, hey, don't stop doing it. This time there's a reason I'm giving it to you, because as an intelligent person, they say a measure of intelligence if you can always change your mind and flow with the times, right? So this one I'm also giving you because I want some people who are new into investing to get in with 1 foot and test the water, so that they don't feel like, I have to get in with the whole amount I have and all these things about whatever. I want you to get in easy, So the first one is fixed deposit accounts. This one I do discourage most people against investing in, but in this occasion I'm going to say, if you have never invested, like I always say, everything has to go with your financial goals and objectives. If you have never invested, okay, this is your first investment. This is your first opportunity to actually put money somewhere and make some money out of it. This is that initial step you're taking towards investing. Then I would say this is the place you want to go to, fixed deposit accounts. Now, the other reason I'm giving this in 2024 is because there has been a shift. When the interest rates were going so high just after COVID, and I would say the whole of 2023, the fixed deposit accounts have been performing quite well, and most banks are trying to lure in people with very good fixed deposit accounts. Now, knowing that the economy might change and you might actually get lesser interest rates, if you get a good one, then you are in a good position to earn very good returns in the next 1, 2, 3 years, depending on how long you fixed that money. Now remember, with fixed deposit accounts, you basically lending your money or giving your money to the bank. You fix that money for a period of time as agreed by the bank. They pay you an interest as agreed by the bank as well. So you get your money, which is the principal amount you've invested, at the end of the period with the interest that it will have earned you. So you just want to make sure that you know exactly what you're investing in. Now, this is good for those who are starting afresh, like I just mentioned, but also good if you have some money that you want to use in a very specific period of time. You don't want to risk it. You don't want to put it in somewhere that you will use it. You want just to keep it away from you. It also helps you with discipline. It also helps you knowing that money is in the bank, because I know we've been brought up with a mindset, because of nurturing, we've been brought up with a mindset that banks are safe. So if you're starting to invest afresh, this becomes a more of a safe area for you. So even though you're investing, but you still have that safety of the bank that you have in your mind, even though banks are not that safe anyway. But in this case, if you can feel that safety, because I always tell people, put your money where you will sleep at night. Put your money in a place that will allow you to sleep at night. Don't go putting money in a place that you can't breathe, that you become so anxious, trying to understand what's happening the whole time. It's not the best position to be in. So fixed deposit accounts, that becomes the first one for those reasons. And like I say, it depends on your circumstances, your goals, and why you want to invest in them. Now, there can be an investment, they will give you passive income for that period of time. So if you put in your 100,000, at least say 10%, you get your 10,000 and your 100,000, 110,000 at the end of that period. Whether it is 3 months, 6 months, 1 year, 1.5 or 2 years, depending on how you agree with the bank or the financial institution. The second one, now this is like a pyramid. It starts low, it starts broad, it starts easy, it moves to the next one. The second one is the money market funds. That's the next level. So with money market funds, which some people call mutual funds or unit trusts or whatever you want to call it, money market funds in Kenya are referred to as MMFs. You want to put your money, give it to a professional manager, a particular investment firm, let them manage the money for you. And what happens? You get your interest on a daily basis. Now, money market funds are more, I would say, flexible. You can start with very little amount. You can open the account very easily. You can always access your money, which is a big thing for most people. You want to be in a position to access your money. You want to use it for something, or it's your emergency fund. You don't want it lying around in the bank. You don't want it losing value in the bank. What do you decide? You open a money market fund account and put your money in there. And then it can start earning you interest every single day. Good thing about this, anytime you decide to pull out your money, you take whatever it is you earned from the money market fund by that time. Okay, so they will calculate it. It's annual return, but they will calculate what you earn by that time. Now, the other disadvantage to it, which I've mentioned in a different video, is that there is fluctuation of the interest rates depending on the economy, right? So because it's liquid money, you can access it anytime. It also means that it fluctuates a lot. So you want to make sure that you're okay with that. You want to understand it before you invest, but that's the second investment you want to have if you want to start the process of investing and just saving money, generally speaking, not just investing. It can be a very good avenue for saving money, compounding your money, because with money market funds, you can always add to that money. We're now upping the ante. The third one is the Treasury Bills. Now, when you decide that, you know what, I want to get a bit more sophisticated, I want to get a bit more complex, what do? You go to the government, you say, hey, I want to give you some of my money for this period of time and buy bills. Bills are basically you giving the government your money and telling them, hey, within this period of time, I would want my money back with this kind of interest. But you determine the interest in the beginning, because what they do is they're selling what you call coupons, and the coupons have a face value, but you're buying them at a discount. At the end of the day, it gives you back the amount that's the face value, and that the difference will be the interest that has been calculated before. If you want to know more about that, check out my channel. But Treasury Bills is the next level you want to go to and put your money with the government. Governments rarely fail. Not saying that they never do. They have defaulted. They have failed to pay. Sometimes very few of them, we can count. Zambia, Sierra Leone, Ghana. There are a number of governments that have failed even in 2023 to pay. Like even Ethiopia just defaulted recently, and they're doing restructuring. So those things can happen. You have to, again, be comfortable with the amount you're putting in, be comfortable with the risk you're taking, and get to know what you're actually doing. So Treasury Bills come at number 3. Followed by Treasury Bonds, very closely related. The difference is still government. With Treasury Bonds, it's more of a long-term fix. So you give the government your money, you buy certain bonds that they use to, to meet the deficit on their budgets, and sometimes infrastructural developments, and then they give you that money at the end of a particular period as a principal, but they do pay you every 6 months, so 2 times a year. So if you buy a particular bond, you buy it for 5 years or 10 years or 20 years, every single year you get payment 2 times on that single bond. So every 6 months you get paid. So bonds are also very good investments. I've also done a video on bonds and how you can use them to actually have proper income, passive income, whether you are retiring, whether you are building wealth, whether you want to compound your money, whether you just want good returns. It's a safe, place that you can always get very good returns. So with bonds, that's the next level. That's number 4. You can always buy bonds. And 2024, again, you've seen the performance of bonds. We've had an amazing year. 2023, we had up to 18%. We began 2024 with around 18%. The first bond that was sold in January, it's January now, as we do this video, hit 18 point something percent. Now that's really good, and that was only 5 years. So within 5 years, you get your principal back plus all the money you've been collecting every 6 months. Tell me how good that investment is. You sit down at home, you worry about nothing, and you are earning your 18% return on your money. Tell me if that's not good passive income. People talk about passive income, but sometimes you still have to wake up and do something. Now, these things I'm giving you are pure passive incomes. They are properly passive, whereby you just sleep and your money will be coming, as long as you invest, of course. So remember, in this case, your investment is your tool for building that wealth. That's the tool. Then we have the next level that most people do not want to talk of or hear of. It's what we call shares or stocks or whatever it is you want to refer to it. So with shares in Kenya specifically, I do tell people, hey, I don't know if it is worth taking the risk sometimes unless you're trading them and you know what you're doing exactly, because trading is different from investing. Get that. Trading and investing are two different things. So if you know how to actually invest or trade shares in a way that is safe and you can get good returns, good for you. But most of the time for beginners, I say be careful on how you get into them. You can still get very good returns from bonds, very good returns from bills, from the things I mentioned there, and not take the risk that you're going to take in the market. Now, the thing with the shares is it can also shoot up and you can get very good returns. There's no limit to how much you can get. Of course, it depends on the performance of the company. But with bonds and the things I've mentioned, like debt securities, it's more like a determined rate of return. So again, with shares, you're buying part of a company like Safaricom, for instance, or Kakuzi, for instance, and once the company does well and their share price goes high, you get your returns. Some of them will also pay you dividends as well, depending on which ones you bought. So again, now that's the next level. Now you're taking more risk. You've learned through all these processes. You're now starting to take more risks and you take a bit more advanced investments that could actually give you way more money. So yes, the thing is, with more risk, there's the chances of way higher return. There's also the chance of losing that same money. So it's a double-edged sword. Like I said, it depends on what you want to do with your money, your goals, your objectives. Make sure you know exactly what you want with your money. So if it's money that you want to use soon, you don't want to risk it, or if it's the only money that you have in your life, you don't want to put it in shares, because the thing is, the fluctuation will affect the amount of money that you have. You may put your money today, tomorrow you have 20% less. You start getting scared about investing. So that's why I always say don't get into the stock market before you start with the available safe options around you. Take it easy, start easy, and you will go far than starting very rough and then you give up. Now, I mentioned shares, and that is just local shares. Then the next level is international shares. Now you want to go out there and see what is in the global stage. It's become a global village now. You can buy whatever you want to buy anywhere. You can even invest in real estate in the US if you're in Kenya. You can invest in London real estate if you're in Kenya. Basically, it's a global village. So you also want to get out there. And out there, we'll talk about shares and mainly index funds. So if you want to invest in something good, something that will give you good money, invest in index funds, and index funds that are international. They could cover different regions, different sectors, or different kind of companies, or different service sectors, depending on what your interest is. But index funds are more like they have a basket. They have a number of stocks in it. So you don't have to go choosing whether I should buy Apple, Google, Coca-Cola, whatever. You just get a basket of it, put your money in there, and you start getting your passive income. And if you decide to get more complex, you go into what we call ETFs. I can do more videos on that. And with ETFs, you can even be earning some returns in terms of dividends as well. Now, the main thing is you need to go international and look at the opportunities available for you internationally. Index funds, if you don't like index funds and you want to go more risky, you can go into individual stocks like Apple, like Microsoft, yeah, like Nvidia, like Google, like Uber, like Salesforce, like whatever. All those companies that you are interested in for a particular reason, and you've done your research, you know what you're doing, you know why you want to buy them, and you have the money to, then why not? You've done all the foundation setting. It's okay to go up and try something else. Get outside the borders, get uncomfortable, see what is outside there. So that gives us shares international. So there's shares local and then this shares international, and that's why I say index funds, individual stocks, and whatever it is, ETFs, whatever you might want to invest in. Then the next level, Kenyans love this so much, and this is on a different scale, is SACCOs. I do say SACCOs are really good in terms of investing. You can put your money in a SACCO. There's no one in Kenya or in Africa who doesn't know about SACCOs. You basically like a chama. It's like a big chama. Put your money in there. Most of the time, people join them because of loans, which I think is a wrong mindset, wrong mentality for joining them. But yes, you can join a SACCO. You can earn your dividends in a SACCO. You can save money in a SACCO. You can be able to borrow loan in a SACCO, and you can also earn money or earn some interest against your money in a SACCO. So it has many benefits depending on which one you join and the terms. Just make sure you understand the terms before you join any, and you know the kind of SACCO that you're joining. Not just any SACCO will serve you. So SACCOs are very good investments as well, as long as you get in there with the right mindset. Not getting in there to try and borrow so much loan, then you get into so much debt that you can't pay off. So SACCOs are the next best thing when you're talking about now local investments once again. Then we have what we call the REITs, the real estate investment trusts. I've spoken about this. If you want to invest in real estate, but you don't want to invest in physical real estate, you don't want to deal with tenants, you don't want to deal with, ownership, you don't want to deal with everything to do with management. All you want to do is put your money somewhere, let someone manage it for you, but it is invested in real estate. So this one specifically invests in real estate, both residential and commercial, and they give you back returns based on what they get off the market. And they are forced by law to share all their profits. So that makes them very good for cash flow. So if you want cash flow from your money, you want to invest in real estate, this is the best place to go. I've done video on REITs in Kenya as well. They're called REITs. So make sure you look for that video and watch it if you are interested. But REITs are very good investment. Last but not least, I would say invest in skills that will pay you good money. There are hundreds and hundreds of skills out there. You can learn, you can always find ways in which you get some kind of certification. You can find people who can mentor you. You can find people who can teach you. You can find ways in which you can learn online for free. Whichever way, find a skill that will pay you. Invest in a skill that will pay you for a long time. Most of the time, skills pay you even more than anything else. So this will not be passive because you might have to do the job. But if you do certain skills, let's say like digital marketing, you end up having passive income. If you learn a skill that is online, like let's say content production, you end up making passive income. Basically, if you learn skills that will allow you to handle certain things or set up certain things that do not require you to go there every day or do any work every day, it will reduce the amount of time you spend working and will give you money. Some of them will require you to work every time you want to make money, and that's fine. If it's a skill that gives you freedom, like Forex trading, for example, it's a skill, can give you lots of freedom, can give you lots of money if you learn it really well and patiently. Then again, depending on what you want, you will always get out as a winner. So invest in a good skill that can pay you, and then with that money that you're going to be earning, you can distribute into all the baskets we've spoken about. And these are the best investments that can pay you a real passive income. Let me know which one you're choosing, which one you are investing in. Let me know which one you are investing in 2024, and let's meet at the end of the year, and you will tell me again what you invested in, the kind of returns you got, and the experience you had. If it's good, we say good. If it's bad, it's a lesson. We move forward. But you know what? Remember, your financial goals and objectives do matter a lot. You need to understand why you're investing in whatever it is you're investing in. I always say that to people so that they know exactly why they are buying the investments they are buying. Not all investments are good for you. Not all investments are meant for you. Some of them are not meant for you. Some of them don't actually rhyme with your personality. Some of them, you just cannot do them. So let me know what you're thinking and where are you investing in 2024.